I think of these three that we're talking about, potentially the most fireworks could come from the Bank of Japan, or there's the most uncertainty surrounding that announcement. Talk to me about what you're expecting, what the implications could be.
Yeah, I think you're right. This is the one where the market's hoping for some action. The action is likely to be, if you like, more quantitative easing from the Bank of Japan, more bond buying. The question is how much more and what kind of bonds are they willing to buy? I think that's the first port of call. And the second is whether they do anything more radical, whether they go and buy riskier assets or announce some other kind of initiatives to try and spur this economy on. But it's great. I saw a list, must have been about 30 possibilities listed about what the BOJ could announce. So lots of uncertainty, which of course is what we love.
Well, how do you play it then going into it?
To be honest, I think the risk is that the market's going to be a little bit disappointed. You know, the yen has weakened over the last few months on the basis that we're going to get this wonderful, radical, bold easing from the Bank of Japan. And so as a result, Japan tends to move a little bit more slowly than markets, and I think that's the risk we face tomorrow. Therefore, I think you're long the yen, you're selling dollar yen because of that scope for disappointment, for being underwhelmed.
At the same time, we've had a lot of different countries start to comment on this anticipation that the Bank of Japan is going to be trying to weaken the yen further, and they've been critical of it. China is just the latest. It was out with a report, the Chinese State Administration of Foreign Exchange, saying in a report, a weaker yen may cause a beggar thy neighbor effect. If other Asian economies follow Japan's suit, trade disputes and policy competition may intensify to hinder regional cooperation and economic integration. Do you think that this pressure is going to have any effect on the Bank of Japan, or is it going to be able to sort of operate independently from that?
I think the pressure is already evident and is already having an impact. After the G20 meeting, where we were kind of fretful about currency wars, everybody tried to play it down as a story. But the reality is, from that point forward, the Japanese government downplayed the idea that they might begin buying foreign bonds, which is one of the more radical suggestions on the table. So I think the pressure is already having an impact. Korea as well have been expressing some discomfort in the context of what it might mean for exports. You've mentioned China. But it's pretty global, and that's, I think, a cap on how much higher dollar yen can go. So again, it kind of suits our case of dollar yen lower.
So you don't want to forget about the other central banks that are meeting tomorrow, even if they are not expected by economists to make any change. But the ECB, the Bank of England, anything in particular we should be watching for?
Well, this is a slightly different situation, because in Japan, the market's expecting lots, and I think we may get little. The risk, of course, for markets to the ECB and the BOE is they're not expecting any policy change. At least that's the consensus view, and therefore the risk is, will you get some action? And of course, that action would be easing. And ECB, I guess, the more probable candidate to surprise, because we've had some softer numbers out of Europe. And if they cut, I don't think they will, but if they cut, then euro will certainly trade substantially lower. And
are you hedging against that possibility?
Well, look, we got the rate announcement. I think the easiest thing to do is be short into the announcement. If you like, there's banana skins out there for the euro around the meeting. We've got a press conference from Daragh. If he says anything about with the balance of risk to inflation, have they changed? Are they more nervous about fragmentation of the eurozone? These kind of issues. Then I think that gets euro lower. So the balance of risk, I think, favours being short euro for now.
Right, and of course there are other reasons besides those directly related to the ECB for the euro to go lower.
Yeah, you've got weak growth, you've got fresh concerns. I think the Cyprus issue no longer has real traction in the market, I would argue. So I think the focus is much more on the conventional, what's the ECB rate response, do we get a cut? We've moved back to that more mundane aspect. But I think the thing to bear in mind, of course, is on euro dollar, we still got the Fed pumping in 85 billion every month. So I think we have to bear that in mind in the context of where policy is at.